Hello, good afternoon. You're watching Closing Trades in 80 now. I'm Anisha Jain. With me is Aisha Faridi. Yes, we were tracking the worst week so far in 2024, but the Friday has actually turned out to be a little better, and it seems like we might close in the green at least for the trading session. There might still be a cut of almost 2% on the Nifty for the week gone by, but at least there is a bit of the green on the screen. Yes, Bank Nifty continues to languish, so that's clearly the pain point with the pressure coming in from HDFC Bank, Kotak Mahindra Bank, but there are other pockets which are actually outperforming. India VIX, that continues to gain and continues to be at an elevated level. So it's closer to 19 now, 18.6 thereabouts is where it was at the last time I checked. Advanced decline ratio has actually turned a bit favorable, and that will tell you that the broader markets are faring a bit better than the frontline index. IT and real estate, those are the pockets coming under pressure. IT, of course, because the global major EPAM actually came out with earnings, they've cut their guidance a bit. So no positive tailwind as such for the sector, and it has had a decent week as compared to the other sectors. So it's correcting a bit. Realty, some profit booking, while metals, they continue to shine in the trading session. So whether it was an Hindustan Zinc, Vedanta, all of these stocks are in focus and doing quite well. But I think, Aisha, clearly the cake has to be taken by the result reactions because there are quite exaggerated moves on those today.
Yeah, absolutely. You are seeing quite a bit of exaggerated move on all the earnings counters. But that said, technology today is taking a bit of a breather. So, that entire pack is under pressure. Kotak hasn't seen any resurrection. And since we're talking about earnings, Cipla numbers are currently on your screens. 939 crore rupees on the PAT. It's slightly higher than what we were expecting, 924. So that's largely in line for Cipla as we speak right now. Just awaiting some more numbers. We are expecting Q4, which is usually a softer quarter because of the weak seasonality in any case. So you're not expecting any big bang performance for Cipla as it is. US sales, though, we are expecting an uptick of about 12% over there, led by market share gains of existing product portfolio that they have in the US geography. Domestic growth, again, an uptick of 10% is what we are anticipating on a year-on-year basis, but we're waiting more numbers on Cipla. In terms of the guidance, margins for FY25, that's something that we're going to be looking out for, and the update on US FDA remediation measures on both their Goa as well as Pithampur facilities. Anisha, any more numbers?
Yeah, EBITDA seems to be marginally lower than expectation because the margin has actually come in at 21.4%, and that compares with 20.4% last year. But we were expecting this number to be a little higher, so slight disappointment if you must as far as the margin figure is concerned. And the revenue has actually jumped up by 7%, so it is in line with expectation on the revenue. Even profitability is largely in line at 940 crores, so not a big miss there. I think, as you pointed out, the devil will be in the details with respect to the US business, because for rest of the peers, they've actually underperformed in terms of the expectation for the US business because the price erosion was expected to settle down. While the commentary is incrementally positive, it's not showing in the numbers as yet. So we'll wait back for all those details. But in the meanwhile, since we have the guests joining us on the show, Sandeep, let me start by asking you about the pharma sector itself. I know it's a little too quick to perhaps comment on Cipla's numbers, but the rest of the majors that announced numbers, post that, would your view change on pharma in any way?
We are seeing from the pharma sector results is that the margins seem to be peaking out, and the outperformance which was seen over the last several quarters, which led to the stocks doing very well as the sector was as it is underperforming, underowned, is now getting over. So I think the big outperformance which we saw from various pharma company stocks, I think that could be getting over now.
Okay, point taken. Let me actually take it across to Naresh as well and get a sense on the pharma stocks and the chart check going. Naresh, what's your view on Cipla, for instance, and the other pharma majors?
So the trend is not strong, but we are not seeing a major correction also across the board. So it's a consolidation in a lot of pharma names. Cipla has gone up massively over the last 1 year, say from 900 to all the way up to 1500 slowly and steadily. For now, 1250, 1300 is a strong support, so not expecting that to break. And on the upside, 1450 remains a resistance, so could remain in this tight band for quite some time. Same is the case with the Dr. Reddy's, which has been struggling, not able to cross 6500 and 5800, 6000 on the downside. So overall, looks like a consolidation for the whole pharma pack.
Okay. In the meantime, while we await some more geographical breakup from Cipla's management, while of course the stock has given up all of its gains, we're now drifting in the red as we speak right now. It has been quite heavy this entire week for the markets. Sandeep, what is it that you're making of the market construct right now? What are we headed in for up until the election outcome?
I think what's happening is that markets have corrected and people are correlating it to what might happen in the election. I don't think that's the right way to do it. I think markets fall under their own weight when they become overweight. So I think they became overweight, so they are correcting a bit. And I think this is happening in the midst of a very strong global construct where we've seen European markets move to new all-time highs, Chinese markets do very well. And there seems to be some shift of money of foreign investors out of India into China and other geographies also because of the outperformance India has done. Now, this could continue for some more time, and I think that will create an opportunity to buy. I'm not so worried about the political construct as such.
So how is it, Sandeep, that you keep your portfolio protected from any which way the political wave may move? And what is it that you would be shopping for?
So you have to make a view. If you think that this government is not coming back, then you should go on to 50% cash and hold that cash and invest whenever the market falls, because long-term growth of India is a given and it will happen. And I think there will be some derating which will play out and then the markets will recover again. But that is not my base case. My base case is continuity. And to that extent, we would be more near 12 to 15% cash and waiting to buy into stocks and sectors which we think would offer outperformance potential over the next 1 year. I think that's how I would play it.
Taken actually supplies down now 4% from the day's high. Let's take it across to the management. Mr. Umang Vora, the managing director, is addressing the media.
We continue to be recognized as a great place to work, recognitions on the ESG side. I think one of the bigger pivots that we are working on is how does Cipla become more innovative, more digitally agile as we craft our journey going forward. I'd like to thank every single employee of Cipla and all our partners and everyone else who's a big supporter for what we've been able to achieve in the last year. It's been truly inspirational and an honor to work alongside some remarkable individuals. I'll quickly go to the quarter. Like every year, quarter 4 is always a seasonally weak quarter for India. And if you look at our One India business, I think there are two factors that have contributed to One India and the way it's panned out. One is the regular seasonal variation. I think that's one thing that's happened. And the second is also the impact of the slowdown in the on our CHL business, which is not really significant, but is the same trend that we've seen on the FMCG side. So overall, One India reported 7% in the quarter growth, and within that, our RX and our generics business would have reported closer to 10%, between 9 to 10%, both combined together. And the CHL business had more tepid growth due to the wellness slowdown. But we're seeing signs of some of that bouncing back. I think we're seeing good demand triggers have come in with the weather pattern right now, especially for some franchisees like our oral rehydration drinks, etc. And I think CHL is starting off strong in the year. In US, we're ballpark in the middle of the range. We came in at 226 million after a very strong quarter 3 of 229, and we had guided in quarter 3 that look, we do think 5 to 6 million is on account of year-end stocking, which is usual of the US trade. So we're ballpark in line with our targets there, and I think there's been very strong momentum. We've crossed 900 million now in the US. This was a business that used to be sub 200 to 300 million till about 5 years back. So it's been a remarkable trajectory in the US. And we're looking forward to some new launches as they come into the US momentum. In Saga, we are now the number 1 prescription company in South Africa. Overall, we still come in with it as number 3 because of the lower amount of OTC in our portfolio. But we're working actively on that. The integration of Actor Pharmaceuticals, which we had acquired some time back, is actively under process, and hopefully the company will aim to gain ranks in the overall market. If we look at emerging markets in Europe, it was a good quarter for them, I think. And again, in Europe, we're looking forward to a significant number of launches. Hopefully that will come in this year. We see some volatility settling down in the emerging side of the world. And so I think that will contribute to overall increase in the trajectory in that business. Overall, I think good progress on our pipeline even this year. We're not disclosing names, but looking forward to receiving news about 2 significant first 2 files that happened in the last year. I think one of them may be surmised to be public. The other one is not yet public. And I think that shows the trajectory of the business as it's going forward. And most of these first 2 files are definitely 2 to 3 years out in the overall launch calendar, as would always be first 2 files, or 2 to 3 years out and beyond that, right? Let me put it that way. So I think the trajectory is strong. We're looking forward to our peptide launches, looking forward to remediation. We've just had an inspection in Kurkum. We've answered to Patal Ganga. Hoping that we will be re-audited soon in Goa, because I think the time has elapsed since the last inspection. There's good progress there. And of course, on the biological side of the business, we are crafting together and trying to bring together a fair amount of synergies across the platforms of mRNA, across the platforms of biosimilars, etc. So all of that is in progress. We're also actively looking at distribution in India, and especially to the last mile. And we are changing a little bit of the model on our generic side to create more synergies between RX and GX. And so I think that is an activity that will probably get over shortly. But overall, I think we're off to, we think that this is that we've had a good significant year in the past, and we hope to be also driving forward quite strongly in this year. So with
Back with closing trades right here in 80 now. Just revisiting what the closing trades are looking like. At least we're going to have a 22,000 close. That's assuming we stay put at this mark. Cipla, by the way, reacting quite sharply to its numbers. It fell quite a fair bit after spending the better part of today's trading session in the green. Fell about 2% and now again has seen a 1.5% kind of recovery from the lows that we just made. BPCL still going strong after its numbers. Hero MotoCorp seeing nice tailwind, still holding up 2.5%. Eicher is looking good. There's Asian Paints, which has seen a recovery about 2.6% higher as we speak right now. Sandeep, would you dabble at all in the paint segment? And given the kind of aberration we've seen with increased and heightened competition because of new players now entering the market, would you say that paints may not be the hottest sector right now to be in?
I think it's not. I believe most stocks in this sector need to fall 40 to 50% from the top for it to come into buy range, because you see the companies have reported weak numbers even without Grasim having made an entry. Now this year we'll see aggressive competition start from Grasim Paint, and the volume growth as it is not so much at this point of time. So when the growth has slowed down, at that time new aggressive competition coming in will create further pressure on the margins. I believe most analyst expectations are still too aggressive in terms of what earnings they can deliver. So it should be an avoid kind of sector.
Coming in on the paint segment for now. But Sandeep, before we let you go, a quick word on the wires and cables industry. Polycab clearly surprised the street with that big beat. That stock was high by 10%. It's cooled off from the day's high. But still RR Cable, Finelix Cables, a lot of these wires and cables company, even Havells for that matter. What would be your take or recommendation on this segment?
So there clearly is momentum here, and there are various companies. So Polycab had some issues related to corporate governance, so I would tend to avoid this stock, although the reported numbers seem to be good. But at many points of time, their numbers have not matched with what the industry has been doing. So that's all I'll say about Polycab. Ex of that, I think in the wire, cables, switchgear, durables, there seems to be reasonable momentum. So that's one segment of the market which seems to be recovering. And as such, based on valuations, most of the companies should do well.
Sandeep, great to have you on the show. Apologies for that cut-in Cipla's management. I had to address that. We'll chat again next week. Let me now welcome on board Dalip Sehgal, the ED and CEO at Nexus Select Trust, joining you on the show right now. Dalip, hi, afternoon. Welcome to ET Now. Just looking at your performance right now, your operating income is slightly pressured on a sequential basis. Tell us what is causing this pressure, because you've guided for a 9% growth in NOI for FY25. So would you say that this guidance is, somehow a cautious one?
Afternoon, and thanks for having me. Let me quickly give you a set of numbers. For the full year, our profit growth, NOI, which is net operating income, grew 16%. And for quarter 4, it grew at 13%. It's also because, our business has some amount of seasonality. Quarter 3 typically is the best for us. So to that extent, yes. But the fact is that we've more than exceeded our projection and guidance. We had said 8.5%, 9%. We've ended the year at 16%. Our consumption growth, which also we had projected at around 9%, we ended at 13%. The first time after a long time, footfalls have gone up, which is a very good sign for the mall business and for retail in general. After FY23, when there was no growth in footfalls, this year there's been a 7% growth. Our tenant sales have been the highest ever at 12,000 crores. Leasing is almost 98%. So if you look at all the parameters, I think we have not just met, but we have exceeded all the projections. As far as the guidance or projections for FY25 are concerned, which is a 9% growth in NOI, I think that is certainly achievable, and I don't see any particular problem over there.
Reading a lot of these reports talking about the concept of ghost malls, how there has been less footfall across various cities, right from Delhi, Kolkata, and a lot of tier 1 towns as well. Is that something that is impacting footfalls, occupancy, or the leasing negotiations for the coming year?
So I think you have to understand that there are 3 categories of malls. There are A grade, which are essentially the kind of malls that we operate and some of the larger guys operate. Those are about 100 odd in this country, in the whole country. In a city like Singapore or New York, each of them would have 100 malls of this category. These are really good malls, well built, well maintained. Then there are the B grade malls, which are basically strata sold. Strata sold is when the developer has sold part of the inventory in terms of leasable area. And those are difficult to manage, and typically those are not the ones that do extremely well. And then there are the C-grade malls, which is what you're referring to. Those C-grade malls are essentially the ones which have been, over the years neglected, not invested enough. And over a period of time, clearly, I don't think they're going to be revived. They will probably need to be repurposed because, they are in a situation where, quite honestly, nobody would be able to revive them. So I think C grade is something, or ghost malls as you're calling it, or the report calls it. I think are malls which have over a period of time decayed and will have to be, like I said, owners will have to think what they want to do with that land.
So give us some color on, where is it that you have your largest presence right now, and where or rather which cities are you looking at expanding more in?
Fair question. I think our presence is now spread across 14 cities. We are in metros and non-metros both. If you take Bangalore as a city, we have 3 malls. Hyderabad, we have 1. And as we have just declared, we are acquiring another 3. And hopefully, once the government approvals come in, that should happen soon. So that will take the tally to 4, all going well in Hyderabad. Pune, we have 2. So in most of the larger cities, we have a fair presence. We also have a very strong presence in tier 2. So one of our best performing malls is in Bhubaneswar in Orissa. It is out of the 18 that we have, this is probably one of the best performing malls. Another mall that we bought a while ago, Forum in Mangalore. Yeah, it was a mall that had 65% leasing. Today we are at 92%. We've got H&M, we've got Starbucks, we've got all the best brands going in there, and it's a complete turnaround. So I think our strategy in terms of acquisition is to make sure that we are buying A-grade malls. We're buying it from people whose core business is not the mall business. Most of them have either one or two malls and really don't have the bandwidth to be able to either scale them up or to manage them well. What we really do is buy them, invest in them in terms of upgrading the asset, invest in marketing to get better quality and more footfalls, bring in the best of the best brands given our size and scale. We are 10 million square feet, we can get the best of the best brands to come in. And that is essentially the business model that we have.
Sorry, Dilip, to interject. There are numbers coming in which we have to address, so we'll have to cut our conversation short. Thanks so much for making time and speaking with us. It's Bank of Baroda which is just reporting its numbers and looks like that the stock might see a bit of a green tick. I'm not sure if it's visible on the stock price already or not, but it's a beat coming in versus the expectation. The profitability for Habitat is close to 4,900 odd crore rupees, and that compares with an expectation which was around 4,800 odd crores. Even the net interest income stands at around 11,793, so very close to that 11,800 mark on the net interest income. The gross NPA ratio has actually improved. It's come down to 2.92% versus 3.08. Net NPA, however, seems to have slightly gone up. So we'll wait for more details on that, because the net NPA has shot up to 1.25% versus 1.20. The pre-operating, the pre-provisioning operating profit, that is pretty much flat year on year at 8106. And overall, I think the profitability at 4,886 crore is something which has been okay. Provisioning is a little higher actually. Provision has doubled on a quarter-on-quarter basis. The provisioning has come in at 1,300 versus 666 crores. So I think it's a bit of a mixed reaction coming in on Bank of Baroda at this point of time. Your PAT number is okay, but I think provision is something that the street might take a bit of a time to digest. We'll do one thing, we'll take a short breather on this show. When we'll come back, we'll have more details to address on Bank of Baroda. Welcome back. Well, lots of earnings that we had to deal with. Bank of Baroda, which is overall a good set of number coming in. For Cipla, it is a weak number when you look at the margins. However, the commentary is something which is quite okay. The US performance has been smart as well, and the margin guidance that the company has delivered is something that we have to watch out for in terms of Cipla, because their FY25 EBITDA margin guidance is of 25% or slightly higher, and that's the reason you are seeing that bounce back, because this quarter might be weak, but the company is on track towards that 25% EBITDA margin profile as well. In terms of the other internals right now, it's Honeywell, which is up 8%. JSW Energy also continues to gain traction, and then Polycab is the other one, which is high around 6 to 7%. On the losing hand, however, Intellect Design is again down 14%. Remember, Avendus Spark has downgraded the stock today after a weak set of numbers. Weakness was anticipated because one of the large orders got done in Q3, but I think the overall fact that the company has been disappointing earlier is something which is pressurizing that stock right now. But Naresh is still with us. Naresh, wanted to get a sense on a couple of these industrials names which are buzzing. Honeywell is up. ABB reports its numbers today. L&T after the earnings is finally seeing a bit of a bounce back today. What's your view on this entire pack?
The names Honeywell looks the most interesting because the stock has gone nowhere for the last 2 years. And in that period, we've seen all the capital goods stock do really well. So Honeywell topped out around 46,000 to 50,000 back in 2021. Then in 2022 also, 44,000 was the top for the next 2 years. Finally, we've started to test that 42,000 to 45,000 mark. So if this breaks out, this could slowly and steadily trend up higher. It's just that in the near term, it has moved up quite a bit. But a dip to 42,000 odd levels would be a buying opportunity. And this one looks relatively better in the whole space as such.
Taken. Quickly wanted to flag out UPL. Take a look at the big spike on that counter. In the coming week, the stock reports its numbers, but 8% higher. Naresh, what would you do with a UPL right now?
So it's a buy here because the stock has made multiple attempts around that 450, 470 mark and held on to it. On the upside, 510, 505 has been a resistance. We've come very close to it today. So it looks like eventually you could set up for a breakout move. Just that the risk is for the last few quarters, every time post results, the stock has fallen. If that surprises, the results come out to be good, it could surprise on the upside. So the risk reward is to be able to digest the result volatility.
We also welcome on board Anand Tandon too. Anand, hi, afternoon. What an excruciating week this has been. Do you sense that a major part of the pain is behind us, or do you think next week could very well be the same?
I think it's too early to say that we are out of the woods. I think the market has just shown some sign of weakness, both locally as well as globally, and there is a good reason to assume that some of that can continue to persist for a while. I mean, if you were to listen to the biggest investor in the world, they are Berkshire is sitting on mountains of cash, which they don't seem to be able to deploy, which itself seems to imply that they are not finding the opportunities in the market, and that pretty much reflects what's happening in the market globally.
Point taken. So yes, the best and the biggest investors sitting on cash, and perhaps in India as well, we have seen that the cash levels at mutual funds have been slightly higher, though the SIP numbers continue to be fairly strong. Over the mark of 20,000 is what we had seen. The asset quality for Bank of Baroda seems to be a bit of a worrying factor, and that's the reason the stock had shot up but has corrected now and has actually moved into the red. And that's because the fresh slippage number is actually higher at 2,900 odd crores thereabouts versus 2,500 crore that we had seen last quarter. The overall provisioning has gone up. The net NPA has worsened a bit. So overall, a bit of a weakness on Bank of Baroda. In fact, Anand, overall the public sector banking names, I mean, we saw a very strong show coming in from SBI. Bank of Baroda has been a bit mixed. PNB was also above estimates. Would it change your view in terms of the PSU banks as a whole, or even within the sector a bit of a churn?
Well, the performance of the entire banking sector has to be reasonably decent. The margins may have peaked out, but in terms of the growth numbers, I don't think that you are still looking at least another 18 months, perhaps, of fairly strong performance before any issues come through. So I would imagine that most banks will actually report fairly good numbers. Now, whether or not you want to pay for it consistently is a different matter. I think the challenge for most banks today is on the liability side, not so much the asset side. And therefore, companies which have strong liability franchise and are able to raise deposits will be the ones that will benefit. Barring, companies which are going through their own issues, like a Kotak or an HDFC, which are specific to them, the trend in the sector is fairly positive. If you look at, for example, the housing finance numbers among the smaller companies, they have been sterling. So that kind of demand continues to come through. I would argue that if you are looking for banking, you would look for those which have got the strongest banking franchise. Clearly, SBI and the private sector, leading private sector banks qualify. Bank of Baroda is also among the public sector banks which can do quite well. The likes of PNB, etc., I have a little more hesitance in saying that they will continue to do great things because of the fact that their past has been rather checkered. And while currently they are doing reasonably okay, their valuations are strongly catching up. So from here on, there's very little choose between most of the banks, at least among the frontline ones. And I think you will get the same kind of performance pretty much across the board from most of the frontline banks for the next, as I said, 12 to 18 months. It is only after that the differentiation is likely to start.
Right. Okay. That's really the take coming in on which way the market tilt is going to head. But just, analyzing some numbers as well. And you've got Tata Motors as well as Eicher too. Let me quickly take it across to Shrishti and find out what we're penciling in.
Well, yes, the trend does suggest that the auto companies are posting good set of numbers, not just the numbers, as well as the commentaries on the positive side. Similar kind of an expectation is what we are having from Tata Motors as well as Eicher Motors. Firstly, let's talk about Tata Motors here. The key to watch will be the JLR EBIT margins, because once again, we are expecting an improvement in that particular number. 80 basis points of uptick is what we are expecting, and 9.8% is the expectation there. While if we look at the India business, that's not quite a mixed bag this time around, though the commercial vehicle volumes were not that great. The passenger vehicle volumes have done pretty well, and this time, all in all, we are expecting an EBITDA margin jump on the back of the price hikes and improvement in the volumes as well, and 40 to 80 basis points of increase on a quarter-on-quarter basis is what we are expecting on the margins of both of these segments. Other than that, on the consolidated basis, our eye will be on the margin figure, 14.2% 9.1% is the expectation there. So any beat will be taken positively. Profit expected at 6,255 crores, while the revenue expectation is of 1.2 lakh crores. Other than that, the commentary related to the demand outlook, especially for their JLR division, which has been doing pretty well with the higher sales of the UVs, will be the key to watch. Now let's talk about Eicher Motors then. This time the mix was indeed quite good, because sequentially there has been a jump of 24% in the Eicher Motors VECV volumes, and that's expected to support. All in all, we are expecting an increase of 60 basis points on a quarter-on-quarter basis in terms of the margin. 26.6% is the expectation there, while the Royal Enfield margins are expected to be just flat sequentially at 27.5%. The company has improved the category and the mix of 350 plus cc category improvement on a YOY basis, and that's expected to support. Profit figure expected at 933 crores, while the revenue expected at 4,228 crores. Here too, the outlook will be on the demand outlook will be the key to watch. So all in all, good expectation from both of these companies.
Good expectations. Let's see what they deliver. The rest of the auto pack has actually done quite okay. So the case is perhaps that it's going to be a better set rather than the weak number. Anand, would you buy that argument? Because of late, whether it's FMCG companies, paint companies, auto companies, they're all talking about a rural recovery.
There is a rural recovery maybe, but the overall consumption continues to remain somewhat weak. I mean, if you look at overall the numbers that we have seen so far, the place where the consumption is going strongest is still the premium segment, whether you take real estate or you take, for example, even in the car segment, it's the SUVs and the larger SUVs which have been gaining market share. The two-wheelers, while they have done reasonably well recently, are still below COVID levels. So, you still have to see a major pickup there. Broadly, we remain a market which is at the higher end in terms of the consumption. The lower end is perhaps showing some signs of pickup, but, there is no particular reason to be very buoyant there. The consumer in India is now highly leveraged. He is now at a 15-year peak in terms of borrowing, and the savings rate is continuously going down. So I think you are still going to look for a situation where the market will be at the premium end and not so much at the bottom end. And that would pretty much define, how you would look at all the consumers. That said, given the fact that FMCG has underperformed, it is very likely that you will see some, renewed interest there for the lack of other opportunities. But it's not something which is growing anytime very strongly. The best of the results are still looking at single-digit or just about double-digit kind of volume growth.
Because, Morgan Stanley as well has downgraded a bunch of these FMCG plays just in a note yesterday. They've downgraded Britannia now, cut the target price to 5,021, a downgrade coming in Dabur 2 to an equal weight, price target now slashed to 500. Similarly on Unilever, ITC though they maintain overweight, but ITC again is not a pure play FMCG company. Tata Consumer maintain their overweight. And so is the case for Varun Beverages as well. But Anand, to the point that you were just making, the urban or upper end or premium end of consumption is extremely high valuation as well. So where is it that you still find opportunity on the table, or at least growth visibility going forward?
Well, that's exactly the challenge in the market, isn't it? That there isn't that much growth and the price that is attractive. Wherever there is growth, the prices are more than factored in all of those growth and then some. In fact, the market is probably extrapolating the growth in a manner which assumes that there will be no hiccups at all going forward. Whereas, as I said, you are looking at a situation where the Indian consumer is now no more, seriously under-leveraged. They are one of the more leveraged among the emerging markets. And in terms of the income to leverage ratio, they are one of the highest. And in absolute terms, the leverage with the Indian consumer is now, at a 15-year high, which is saying something. So you will look at a shrinking kind of consumption basket, and that is why probably you are still looking at people looking at construction and defense and government-led infrastructure initiatives as the place to be, simply because there at least you hope that there will be some consistent demand growth and the order books will materialize. Now, that said, again, if you see the defense companies, many of the expected orders are moving over to the next year. There is a constraint in terms of how much the government can spend in a particular year, and that is now going to have to play through. So while it remains a multi-year theme, and probably some of the companies may continue to do reasonably well, I don't know whether there is the kind of buoyancy that we are seeing in the market is fully justified.
Point taken. So that's the answer coming in on defense, industrials, and the overall pack at this point of time. Just wanted to highlight a few more other names as well before we move forward. Take a look at Hindustan Zinc. That spiked as much as 13%, and it's having a rub-off impact on Vedanta as well. That stock too is high. Before I take it across to Vinny for Zomato, let me quickly get in Naresh's view on these metal names, Hindustan Zinc and Vedanta. Naresh?
Hindustan Zinc is a little overbought in the short term. Vedanta has gone through a small consolidation, but the trend still remains positive. The breakout was huge, follow-up has been huge, but for the last 10 days, it has been consolidating. So Vedanta still looks okay till the time it holds above the 380, 390 mark. The other names which look interesting is a Hindalco, which has given a big cup and handle breakout and sustaining above 620. So that could be the next leader in the metal pack.
Right, okay. Important one from a market perspective. Zomato, that also is going to be coming out with its numbers. So let me take it across to Vinny, try and understand what the street is penciling in, not just for Zomato, I guess, Vinny, but more importantly for Blinkit.
Absolutely. Blinkit is going to be the key focus, right? Because Q1 FY25, when they have given the target that they will be achieving that adjusted EBITDA, and some analysts are expecting that maybe it could be possible that this time Blinkit also could become adjusted EBITDA, but that's what we're watching out for in terms of commentary. Other than that, overall on a consolidated basis, the Zomato revenue, we're expecting a growth of around 11%. Profits also, we are expecting a decent growth. And in terms of EBITDA, the normal EBITDA, that's calculated EBITDA, we're expecting it at 173 crores versus 126 crores, which is a growth of around 37% versus last quarter. Margins expected to be stable at 4.8% versus around 4% last quarter. Food delivery business expected to see good growth trends, continuing the focus that is there on platform fees that are taken an increase. So that is something that has been supporting the growth there. You know, will they be taking more platform fee hikes? That's something we'll watch out for in the commentary. Average order value is expected to remain flattish sequentially, while in terms of the gross order value for Blinkit, we're expecting it to be in the range of around 12 to 13% sequentially, as well as in terms of revenue growth for Blinkit, expected somewhere at 18%. Even the Hyperpure business, that has been doing very well. That's doing a strong performance in the last few quarters, and that is also expected to see us around a double-digit growth or high single-digit growth, you could say. So 9 to 10% growth is what we could expect there. Let's watch out for the growth in food delivery, increase in platform fee, any more expectations on that front, as well as any update latest in terms of Blinkit, and the target to achieve that adjusted EBITDA positive for Blinkit is a key factor to watch out for.
So that, of course, the numbers will come out post-market hours on Monday, but the stock has started reacting a bit already. Let's pull up the intraday chart, and in the last 20 minutes or so, there has been an uptick on Zomato, not by a whole lot, but at least it's high by around 3%. But it's a day of Akshaya Tritiya, the day where people believe it's auspicious to buy certain metals, precious metals like silver and gold specifically, and the stocks of Kalyan Jeweler, Muthoot, Manappuram, all of these are actually doing quite well. In the last few minutes, there has been a sizable uptick on that one. Anand, what's your view on Manappuram as well as Muthoot? Because these two names were beaten down after that RBI, 20,000 limit on cash dispersal had come. But would you be buyer in these dips on these names?
If you like the space, there is no reason to not look at the fact that they are a little cheaper or were a little cheaper till a while back. The RBI action, is not likely to make any major impact if it is taken across the industry. I mean, frankly, if the buyer or the borrower doesn't have a choice between taking money in cash versus taking it through his UPI or bank account, he will take whatever he needs to if he has to. It is only because there is some amount of arbitrage between one company and the next in terms of whether they can take cash or not. There is some effect. Now, there may be some move towards the unorganized sector if people are a little cagey about taking money through official channels. But that is not likely to be material. And more importantly, the unorganized sector is not likely to be able to have the same resources to be able to grow the book as efficiently as the organized sector can. So I think that RBI action should only help to increase the size of the visible industry and will not have any lasting impact. So overall, the call really you're taking is whether or not the business, the underlying business is good enough to be investing in. And by and large, the growth is fairly strong there.
Right, okay, and you can see most of those jewelry stocks actually hold out very well. But you know what's not holding out well? BOB, that after its numbers, and especially given that both NPAs as well as provisioning came in much higher than anticipated, that stock has taken quite a tumble. It's now down 4%, and that's almost 5.5% off from the day's highs. Let me take it across to Gaurav and get in more details on the numbers. Gaurav?
When we talk about profitability, the bank has actually performed the number which was actually more than what the street was expecting. So, for example, net interest income increased almost by 2.3%. PPOP was actually flat on a YY basis, but if you look at profitability, that increased almost by 2.3% again on a YY basis. But what has happened in this quarter is that provisions, if you look at this number, this has gone up almost by 95% on a sequential basis. Apart from that, if you look at fresh slippages, now this number has increased almost by 20% on a sequential basis. This stands somewhere around 2,855 crore rupees, and the slippage ratio also as a result has gone up to 1.12%. Talking about the GNPAs and NNPAs now, while GNPAs have actually improved, but if we talk about net NPAs, that have actually increased almost by 5 basis points on a quarter-on-quarter basis. And lastly, if you look at credit cost also, that has also gone up to 0.57% versus what it was at 0.39% on a quarter-on-quarter basis. If we talk about profitability, the net interest margin had actually improved for the bank. It has gone up almost by 17 bips on a sequential basis to 3.27%. But it seems that the asset quality is a concern which is happening in Q4 FY24 for the bank, and as a result we saw that bank actually nosedived almost by 4% in a day-to-day. So definitely watching out on how the commentary is coming up from management, but for now the numbers seems to be on profitability, it seems to be above expectation, but on asset quality it seems that the bank has delivered below expectation results in Q4 FY24.
Gaurav, thanks so much for that. That stock is clearly tumbling and it's having an impact on the rest of the PSU names as well. I mean, SBI, the earnings are already out, so shouldn't be a reason to react, but it's definitely down. And since BOB numbers have actually come, there's an additional downtick that has come there. Other PSU names will also come up for you on the screen, and the PSU index itself as well, because the entire banking index is actually under pressure right now, whether it's Punjab Sind Bank, Bank of India, even other names from the entire banking space have all seen a bit of a tumble in the last few minutes itself. But the week hasn't been that great for the Nifty. It's perhaps a week which is trading to be one of the weakest in this year so far. The FIS sell figure in the month of March has been over 23,000 odd crores already. India WIX had shot up as much as 80% from April lows, and the fact that the shorts had accumulated in the system quite a bit. Within all of this, Anand, have you managed to kind of keep your buying list ready that on these dips that you're looking at, adding positions into those names, those sectors or themes?
Well, as I said, I think there is some more way to go for the market before one starts to look at buying. Given the fact that we are moving into a very major event, and that is the election results coming through in another few weeks, I had been recommending that one should be a little easy in the positions or buy some protection, because the expectations were running again ahead in terms of what could possibly be delivered. I think the market is beginning to see some of that, and what perhaps you're looking at is a little bit of a reaction to that as well, besides, of course, the valuation and the global macros. So at this stage, I would still remain somewhat light and keep some cash available. There is time to buy on a longer term basis, after the events are over. It's not as if the market has great upside from here in the near term.
Okay, just heading in to close around 9 odd minutes or so. Naresh, let's get some BTST ideas from you.
This is a buy on Bharti Airtel, which has been trying to cross a 4-day high and showing a lot of relative strength. Stop loss at 1290, target price of 1330. Second is a buy on UPL, which has seen very strong price volume action today. Stop loss at 484, a target price of 510.
Okay, so those are some of the top recommendations. UPL, despite that uptick, Naresh is quite, positive on that counter. But since, even Anand was talking about how elections is the biggest thing to watch out for, markets and mandate, that's a conversation we've been having with a whole host of experts as well. Today, of course, we spoke with Sandeep Tandon to get a sense as to how he's been able to spot the, better of the ideas so far, and what would it mean in terms of the election volatility. Listen into a slice of that conversation.
Global market also correct, then we will also tend to follow. But the global market remains stable, then I think the reaction will be more positive out there. But I think one has to be very clear. I have been very vocal about for a while that we have saying that easy phase of bull is over in India also. Okay, but you should be very clear. We are in decisive bull run. Okay, so buy on dips, long-term strategy will play out. but we are in difficult phase of bull run. So we are in bull run, but we are in difficult phase of bull run. So one should not conclude that market, like a lot of people are talking about, market has peaked down, valuation has been very expensive for more than 1 year. This narrative I'm hearing, but market doesn't correct. If correct, they come with the in a ferocious manner back. Okay, all the value thesis comes back, PSU comes back, metals come back, pharma comes back. Look at the new leaders which have been seen in last 1 year, they come back with a vengeance. Okay. With that background, I will still believe India is buy on dip. So I will look for, as a mutual fund, as an institution house, we will be looking for a buying opportunity because we remain very constructive on India's equity, and India's will emerge as a unique asset class over a period of next few years. So Nikunj, is not only in the month of May, FIs has been seller for a while. Okay, now if you really sit down and analyze their characteristic, yes, we can say FI ownership at 11 years, which is one of the lowest. Okay. But what is very important to understand, they used to run very concentrated holding in the past. If you can recollect, few banks, few technology company, few FMCG, and few consumption name. That was their thesis. So the very concentrated bets were there. Now, obviously, those admired and all these stocks which they own were, as part our thesis, were part of the admired territory, which has peaked out in September 2021 and it's still correcting. Now, with that background, what we have noticed is that they are pruning down exposure in these concentrated bets which they have for a while, and they're actually getting into more diversified portfolios. So that's the reason you have seen a lot of people have participated in new age company, they have participated in the IPOs. Okay, so some of the time we also wonder why they don't participate in the secondary market where valuations are attractive, but there's a big queue. Any IPO comes, there's a big queue. Any block deal happens, even ITC, such a large deal got absorbed. Any block deal gets absorbed very easily. So some characteristic has changed, from a very concentrated holdings which these FIs are holding is now becoming slightly more distributed sort of thing, is much more diversified. So obviously they have to prune down these concentrated holding and buy towards a diversified portfolio. That's the reason you're seeing selling keeps on happening in these FI concentrated names.
Okay, just counting down to the close, and just want to, highlight what the texture of the market today has been. Choppy, but definitely better off than what we saw yesterday, for instance. SBI, though, has drifted about 0.6% lower, is where it's headed in for. ICICI Bank, flat, although again, a very volatile ride for this stock too. L&T, which tanked about almost 6% yesterday. Today, again, that too has had a very volatile ride. That dip which came by intraday, and then the recovery thereof hasn't seen any meaningful recovery from those session lows. Naresh, just quickly want your call on L&T, whether around those 3250, 3200 odd sort of levels, would you be a buyer if L&T were to decline more with the market?
So the last breakout for the stock was around 3100. So 3100, 3150 should be a strong support area. So that is where you would ideally like to buy, or one could start accumulating here and add more on the way down to 3100. But looks like we are getting into a consolidation, not expecting a fast runaway move here, but a slow and steady recovery towards 3500 is what I would expect. So it should be a slow accumulation on dips from here on.
So that's a view on L&T, but Naresh, a quick view on Intellect Design as well. At what level would you be a buyer, if at all?
So after such a price sharp volume uptake, one should wait it out. I would wait for some more, not buy on the first dip itself. Let us see where it falls, but move towards 750, 800, which is too far as of now. But that's the price point where a good entry looks like.
Right. Okay. Anand, we'll let you go on that note as well. Naresh, thanks as always for taking the time out. Let's begin winding up for the day. Finally, we managed to resurrect and salvage the situation a little bit, closing above the 22,000 print for the Nifty for this week. Let me hand it across to Winnie and find out how the day throughout has been like.
So absolutely, at least finally we are closing in between 22,050 levels is what the Nifty is managing to close onto. Though, yes, we're off the day's highest point, but we're not at the day's lowest point. So there is some respite that at least for the day that we have. Sensex 2 will be closing with gains of almost 0.4% in a trade. Mid and small cap today, when you look at the Nifty mid cap, that's a very good up move today. 1% uptick almost around that level for the Nifty mid cap, while the small cap 2 is holding on to gains of almost 0.7% to an 0.8% in trade. So clear outperformance today is again back with the broader markets we're seeing in today's trade. Other than that, advanced decline ratio now at the end of the day, we are seeing more in the favor of advances versus the decline. Other than that, look at the metals. All these metal names today were shining in trade. So yes, we did have Hindustan Zinc, Hindalco, Vedanta, Hind Copper. All of these managed to hold on and shine bright in trade today. Look at Hindustan Zinc also 16% gain. Vedanta also very strong gains that we're seeing there. FMCG names, yes, we did have some of the movers in the FMCG side. So ITC was one of them, which was managing to hold on to some bit of a decent gain, and that was in terms of ITC, 2% gain for ITC. Other than that, we have Radico Khaitan, HUL, which managed to hold on to almost a percent, more than 1.5% gain. At the end of the day, also closing in the green. That was the FMCG side. What's not doing well today, and what was among the top losers, was the Nifty IT, PSU banks, as well as the realty side, which saw a bit of a pressure today, and those were the sectors which were trading in the red. Let's look at some of these other names. Intellect Design, that was down and out after its numbers. We had Cipla that reported its numbers today, so we're surely keeping an eye on that. That's our recovery after its numbers, and then a bit of a fall. So yes, down again, Cipla 1.53%. At the end of the day, will be closing in the red. Let's look at Sula also. Sula Vineyards, what was that doing in trade? We did have a brokerage note that came in from CLSA. So Sula Vineyards today was a bit under pressure, down 4%. BPCL on the other hand managed to report a good set of numbers. Concall highlights that came in today from BPCL, and BPCL managed to close with strong gains of around 4.37% in a trade. Other than that, Suryodaya for Small Finance Bank, that was the one which reported its numbers. Bank of Baroda reported its numbers. We're keeping an eye out on Bank of Baroda. It was just a short while ago that we saw the numbers coming from Bank of Baroda, closing with cuts of almost 2.87%. But yes, for the week also, when you look at it, this week was not quite exciting for the Nifty and the benchmark indices or the broader markets, because we'll be closing overall for the week on the side will be the red side that they've picked out. But at least Friday was something that we're closing on a positive note, and auto something is supporting the market this time. We've seen good moves from TVS Motors, Hero Motor, and that's how the market looks like, at least on a Friday, closing in on a positive note.